We are here for the podcast number 2 of Compounding Interests podcast.
Yes.
I like adding the ing. We keep going back and forth on compound interest or compounding interest. So, okay. So last episode we talked a lot about just kind of mine and your backgrounds, like where we came from, what our goal is of the podcast, and I think in almost every scenario, when you talk to somebody who is either a 1099 contractor, they are self-employed, or they run a small business, or I guess what's another situation?
I think you hit them.
Yeah. Okay. So everybody says, like, where do I start? And you hear a lot of disputes about, you should definitely do it this way. Wait till you earn this much to switch yourself to this strategy, right?
Yeah.
So, like, when you get somebody in a tax planning meeting coming to you and saying, what do I do?
Let's have you be Joe Schmo.
Okay,
and
so
you don't know anything.
Okay, so I'm Joe Schmo. I'm starting Joe Schmo business, and I sell.
No, you don't even know where to go.
Oh, I don't even. I haven't even
you're
picked it.
just saying I made this money.
Oh, okay. Yeah. So I made money.
Okay. Do you work on a 1099 or a W-2?
Well, I don't. What does that even mean?
Do you have money taken out of your check every 2 weeks, like for taxes?
No. It's just like the company I work for pays. They just send me the exact amount that I worked. Cool. $10 an hour, $20 an hour, or commission.
Okay.
Right?
So then you're on 1099.
Okay.
If you're on a W-2, then you're going to know it because you get that stub and they're taking out the taxes every 2 weeks.
Right.
If you're just getting a check or money in your account that has no taxes taken out, likelihood is that you're a 1099.
Okay.
So, being that you're on a 1099, your tax situation is completely different than if you were on a W-2, right?
Okay.
So people with a W-2, they just get to go to their tax accountant at the end of the year, or even do TurboTax.
Right. That's what I've done previously, right?
So
TurboTax.
Huge mistake if you were to do that again.
Yeah.
What you're going to want to do is make sure to come to me each year, because that 1099 has had no self-employment taxes taken out, no federal taxes, and no state taxes.
Okay.
So you can imagine, you've probably heard people say, like, you need to put 30% aside, right?
Totally.
That's crazy. If you make $20,000 this summer and they're asking you to put $6,000 aside, what are you left with? I mean, you probably spent some of that during the summer. What are you really left with? That sucks.
Right.
So, what we'll be able to do for you is actually set a business up for you, and it's going to allow you to pay much less in self-employment tax.
Okay. Right. Now, there's a few different things you hear. Like, when is somebody self-employed versus when, what does that even mean? What, like, the definition of self-employed?
So self-employed is anybody that's on a 1099.
Okay.
Really.
So if I'm working for you on 1099, then I'm considered self-employed at that part. If I'm a contractor for you,
you're considered self-employed. So you're either a 1099 contractor or you are a small business. So if you're a small business or you get paid on a 1099, consider yourself self-employed for tax purposes. So that means that you're going to need to do something to change that so that you can get a lower tax outcome. Because right off the bat, let's say you made that $20,000.
Okay.
You're going to owe 15.3% in self-employment tax, right?
But that's not taken out of my check.
No.
Right.
So you're going to owe it at the end of the year.
Okay.
So 15.3%, what's that? $3,060 on 20 grand.
Right.
Well, you have an option to set something up called an LLC.
Okay.
It's a limited liability company. I know that sounds foreign, but
everybody knows LLC, or most people have heard of an LLC.
But all an LLC does for you is limits your liability.
Okay.
So if you're out there driving during the summer or
let's say I'm washing windows. You have a washing business. I'm a contractor for you.
Cool.
I'm washing windows. I break someone's window.
Yep.
Right?
Yep. If you break someone's window and the glass cuts the, young boy's arm and he needs to get surgery.
And they sue me.
They sue you. Well, now you've got an LLC. They can only sue you for what's inside of that LLC, which would be the income.
Business income.
Coming,
Okay.
from me. But if you say you had like a real estate empire on the side, they can't come after any of that.
Because
you've got that limited liability company.
Gotcha. So whatever I'm earning just on the window washing, I would be liable for. But if I had a side hustle that was not connected at all to that business, they wouldn't be able to come after that.
Exactly.
Okay.
Yep.
Yeah.
If you didn't have the LLC though, then they could sue you for anything and everything you got.
Gotcha.
So that's a huge must-have for anybody that's on a 1099 or self-employed, whether you make a lot of money or don't. You don't want to get screwed and be, paying all of your W-2 income to a lawsuit.
Yeah.
So yeah, make sure that you've got the LLC set up, number one. But we wanted to help you on taxes.
Now, am I considered still self-employed as LLC?
Yeah.
Okay.
Yep. You just have your own business, but you're a self-employed business.
And how do taxes work? Like, some people think that as long as you have an LLC set up, I can write off tons of expenses, and I'm going to save way more money than if I'm 1099. Is that the case?
So yeah, no, people think being on a W-2 is going to be a lot.
No,
better.
LLC versus 1099.
Oh, that they're
Yeah.
going to make more?
Or that, like, because it's an LLC, I can write off
Yeah,
more
no.
than if it was a 1099.
No, that's a common misconception. Whether you have an LLC or not, you can still write off the exact same amount
Okay.
of expenses. It
Okay.
does nothing for you for tax purposes.
Gotcha.
Nothing.
Okay.
So what you want to do is elect S Corp status, S Corp taxation through
Sure.
the LLC.
Okay.
So what that does is allows you to become an actual business and no longer considered self-employed. At that point, you have one employee. That employee is you.
Yeah.
So you're now an employee.
So I'm an employee. So in layman's terms, I set up my LLC. Let's say your business is window washing R Us or something,
Yeah.
right? You're gonna pay my business, which is, John Washes Windows LLC, right?
Yeah.
So you pay my business, and now I'm an employee of my business.
Exactly.
So then my business pays me, but you're
Yes.
paying my business.
Yep.
Right.
So you've got your revenue, you've
Yeah.
got the money you make, and if say it's $20,000, now by law the IRS says you have to have one employee.
Yeah.
So you are now the employee and the employer, which you were before, but this is in a more clear manner.
Yeah.
And so now the IRS says you have to pay that employee a reasonable wage.
Okay.
A reasonable wage can differ depending on what it is you're doing.
Okay.
But most of the time, what's held up in IRS court cases, if you're doing 16% or more, you're usually good.
Yeah.
To be safe, we normally do around 18%.
18%. Yeah.
So unless you're real low income, then we go down to 16.
Yeah.
So maybe for 20,000, we're going to do a 16% wage.
Okay.
So you'd end up doing let's say a $3,000 wage.
Yeah.
Right?
Okay.
You pay yourself that $3,000 just on paper. You're not going to write yourself a check and do all that.
Yeah.
It's just on paper.
That's what we're reporting to the IRS. Is
Yes.
that from that 20,000, I'm paying myself 3,000,
Yes.
and so now my business income is, I guess, in a way, I'm taxed 15.3% on the 3,000,
Yes.
but the remaining 17,000
is not taxed on
at self-employment tax.
for self-employment. It's
Yeah.
not taxed at all for self-employment. Then the full 20,000 is taxed for at federal and state rates.
Okay, gotcha.
Yeah. Although you do get the 199A deduction. We'll talk about that in another podcast.
Okay.
Complexifies it a little more,
Yeah.
but it's also another tax saving deduction that you get by having a business.
Okay. At what point? So I guess in other words, let's say I made $1 million, right? I washed a lot of windows.
Yeah.
And,
Or you had people underneath you, right?
Yeah, or I hired people who did it, and you paid me, and then I paid them,
Yeah.
right?
And then they did the S Corp strategy.
Sure.
Yeah.
So let's say I made $1 million. You're saying like typically 16% of that million.
18 at this point.
18
because
at
it's
this
a higher
point.
number.
We want to make sure we protect them even further.
Yeah.
18 to 20%. So I'm making
Yeah.
anywhere as my wage $180,000 to $200,000 off that million.
Exactly.
Okay, so that's how, like, the IRS understands that a reasonable wage is something that is just like a percentage of my
Yeah.
total business income.
Yep.
Okay.
It's just got to be kind of like any other business that has a bunch of employees. What would the average person's wage be for doing what you do?
Gotcha. Yeah.
So that's kind of how you base it.
Is
off.
there any situations where you need to pay yourself a higher wage than 20%, or then?
There might be none that I've really ran into, but depending on your like skill level.
I didn't know if there's like an industry
yeah,
that
let's
you
say
pay more
if
on
you were
average.
if you were like in the professional industry or maybe an actor or something, and they paid
Okay.
you on 1099,
35
I would
million
think
or
you
whatever.
need to pay yourself a little bit higher
Okay.
for that type of thing. But what I would do is go straight to my accountant and ask them,
Yeah.
do I need to do more?
Yeah, exactly.
Because most of the time you don't. And it's quick for me to look it up and go,
Yeah.
do I need to do more for this industry?
Right.
You know, I've never ran into doing taxes for someone
Yeah.
that I felt we needed to do even more.
Okay, so let's go back to I've made 3,000 that I've paid myself as a wage.
Yeah.
What from a logistical standpoint of reporting that to the IRS, how does that work?
Okay, so first off, let me just tell you, if you're the all you need to know when you come to us as an accountant, basically we're gonna do everything for you.
Yeah.
All you really need to do is trust what we do,
Yeah.
and all this stuff is gonna happen. So
Okay.
right now it sounds super complicated,
Yeah.
and I'm telling you because you want to know,
Yeah.
and some clients do want to know.
Sure.
I think it's best if you do.
Yeah.
The more you know, the more of these cool things we can do.
Remember like those commercials, the more you know, right? And it was like a star that went. Yeah.
Yeah, no, I don't remember that.
Compounding interest.
Yeah, okay. So, the more you know, the more things that you can do. So I like that you're interested. That's my favorite type of client.
Yeah.
But, you know, you don't have to do all this stuff. You don't have to know it all because it's going to take you 10 to 20 minutes this year to do your taxes in its entirety with
Okay.
us.
Huh.
So just so you know that, I want everyone to know that so that they know that they can take that easier route if they want. But for you, let's go through it. So you've got that 3K wage. We actually have to do something called a 941, which is a quarterly report. The IRS requires that those are filed. Many firms don't do them because you can get away with doing that for a couple
What if I
of
don't?
years.
What if I don't? What happens?
Then you're going to get an audit in a few years.
What if my accountant hasn't for the last 5 years?
There's a very good chance the audit is on its way.
So quarterlies have to be reported,
Yes.
even if it's a zero.
Even if it's a zero, yes.
Interesting.
As an S corp, that is a requirement. So we're going to do we're going to do that 941 for you in October because we're going to do 4 a year for you.
Yeah.
But let's say the first one's October, we're going to do $1,500 in October
Yeah.
as your wage.
Right.
You're going to owe half that self-employment tax
Yeah.
in October. And then in January, we're going to report the next 941 and Form 940. Also create a W-2 and W-3 for you. So we're going to handle all of that back
Which is all
end.
tax jargon to me. I don't
Tax
understand
jargon.
all this stuff. Like,
Yeah.
all I need to understand is that you guys are going to take care of every quarterly report that you need to report for my
Yes.
wage, and that because I'm an employee of my business, you're going to pay me a W-2, or you're going to report a W-2 from my business that you paid, Windows Washing R Us, to Joe Schmo Enterprises, Joe Washes Windows LLC. You pay $20,000. From that 20, on a W-2, it's going to show $3,000 that I pay myself on.
Exactly.
Yeah.
Yeah.
Okay.
So you'll have that.
So just like if I worked
yeah.
for the movie theater, $10 an hour,
Yep.
they'd give me a W-2 at the end of the year. Same
Exactly.
thing from my business to me.
Exactly.
Okay.
So
Interesting.
yeah, pretty simple on your end. You
Yeah.
get the you get the 940 in your email. Tells you, hey, print out pages 1, 2, and 3. Right. Sign page 2. Write a check for the amount on page 3. Step 4. Fold it up. Step 5. Put it in an envelope.
We have to be really clear
Like,
because
we
people are like,
make
"Can I
it-
fax it? Can I?
Yeah.
Can I drop it? Yeah, sure."
So we
no,
make it super clear.
Mail
Follow
it,
the
people.
steps.
Yeah.
1, 2, 3, 4, 5, 6. Our goal is to make it so like a smart monkey
Yeah.
could do it.
We're
We've
actually
said
trying to
that a bunch.
automate this whole process, by the way, to make it so you never even have to write a check or.
Yeah.
So we're working on that. It's been a process because
Yeah.
there's not many companies or softwares that exist that will do that
Yeah.
at a reasonable rate.
But that would be the process.
Yeah.
You would just do that 941.
Right.
At third quarter, do it in the fourth quarter. Takes 2 minutes each.
Yeah.
And then during tax season, you're just going to fill your packet out, send it back,
Yeah.
and that's all you do for the year.
So let's go back to the 17,000 that's remaining. So I
Yeah.
have all that. I've only paid myself 3,000. I have 17,000 remaining. Yet I had some expenses while I was washing windows. I had to drive to all those appointments. I had to buy my own materials because you didn't provide them.
Yeah.
uniform.
Uniform. Your cell phone bill.
My cell phone. Their clients are
the
calling me
iPad you
directly.
bought.
Yep, iPad to show them how it works
That
or to sign the
iWatch.
contract. My Apple Watch. All
Yeah.
these things. What happens with all that 17,000 that's remaining?
We're going to take the 17. We're going to deduct all of your expenses down. Probably going to get you somewhere, on average, going to get you from 17 down to 7 to 10,000. Well, then you get the standard deduction of 12,000. We'll talk more about the standard deduction later, but everybody in the U.S. gets that. If you're single, you get 12,000. If you're married, you get 24,000.
Will that go up in 2021?
It's not planning on that.
No, okay.
So it could. Every year it has the opportunity to change, but it'll be 12,000. So at that point you're at 7 to 10,000 in income, but you get this $12,000 deduction. So now you're at zero. So your federal and state taxes are now zero. If you're in school and your parents are not claiming you, well, then now you're going to get a $1,000 refund.
Yeah.
So if you worked a W-2 job where you made $15,000 on the side and you had taxes taken out on all that, that's going to add to your refund and get you up to a total of $2,500 refund.
Yeah.
So compared to being on a W-2 for the full $20,000, you're coming out a good $3,000 to $5,000 ahead. It's a 9-day difference. Not to mention the fact that now you can do the ERC and get $5,000.
Yeah, ERC is a tax code credit. We have videos about
check
that.
those videos
yeah,
out.
check them out.
Yep, and then at that point you can also set up a solo 401k.
Which we'll have a podcast about.
Yep, and just, I mean, the amount of things you can do as a business owner really are 9-day difference between what you do on a W-2.
Yeah.
So if you've got a job offer for W-2 and one on 1099, you'd have to pay me double on the W-2 to make up for the differences. Some people will say, no, it's 30% or 20%.
Yeah.
Not for me, because I'm a tax guy and I'm going to take advantage of all those tax savings. But for the average person, maybe you got to get 30% more.
So I hear all the time, I talk to quite a few people, friends of mine and different people, that their accountants have told them that they should not go to an S corporation or an S election until they've made 6 figures or more. Why do they do that strategy, and what's different?
Yeah, so that's one of the dumber things that I hear coming from other people, right? Because I think it has to do, honestly, maybe with just ignorance, and then also greed.
Yeah.
And then the accountant being lazy.
Yeah.
Because they don't want to have to do the extra work that it takes for an S corporation.
Because now it's quarterlies and all these
all
other
that
things,
different stuff, when they could bill you close to the same just for doing your Schedule C.
Yeah.
But if you make $100,000, and that's your profit, you're literally going to save $13,000 or so. I mean, 10 to $13,000 just in taxes automatically from having the S Corp status. So if anyone's telling you not to do it till you hit 100, that is BS. If you profit over $5,000, you are guaranteed to save money by doing the S Corp strategy, even if you were to get your taxes done anywhere else, even if they were doing it for free.
Yeah.
And that's even after our fees for the whole year.
So
$5,000 or more. Yeah. They could be doing it for free any other way.
It's so much cheaper to do it by myself.
Yeah. Well, you're throwing money in the garbage.
We had an example of someone who had put all their tax information in on TurboTax. They were an independent contractor. I don't know if they'd set up an S Corp or whatnot, but they entered in all their information, and then they said, oh, wow, I'm going to pay this much in tax. They sent it to us. We did it based on it being in an S corporation or taxing it as an S corporation. They saved $18,000 in taxes that they would have paid. So the cheaper option would have cost them way more in the long run.
Yeah, you don't look at what's cheaper as far as to get your tax done. If you're looking at that, you're not thinking past chess move number 1. Yeah. You've got to be thinking 4, 5, 6 steps deep. Yeah. And by the time we get done with it, you might just save yourself $17,000. Yeah. I mean, we got to get Chase Williams in here on one of these. Yeah. When we took over his stuff at JB, when I was running that, I think we saved him $30,000. Yeah.
I mean, and there's case after case of that. That's easy to show. Yeah. I guess for me, okay, so let's say the first year, right, we use that strategy. I pay nothing in state and federal tax. In fact, I'm going to school, and I have a couple other things that have allowed me to get a tax refund, right? But year 2, now I've recruited a few people. My business is growing. And I mean, if you even look at our business is like 10xing this year compared to last year. So that our tax outcome is 15xing. 15xing. Yeah. But our tax outcome is significantly higher. And so let's say I'm year 2 now. Okay, we're doing the S Corp strategy, and I do make 6 figures this year. I make 100,000. So my wage is going to be 16,000 or so, 17,000, 18,000.
Yeah.
And then from that, I'm paying payroll tax on that. So my outcome on that is going to be almost $3,000, $2,600 or so that I'm paying in self-employment tax.
Yeah.
But
compared to 15,300.
Right. So if we take away the 18,000 I pay myself in a wage from that 100,000, and then now I have 82,000 remaining. Oh, I'm playing with this chair. I have 82,000 remaining. I mean, now my taxes just on my earnings is significantly greater. Like, what tax strategies are you looking for me as an S corp to? Can I get my tax in my taxable income down to zero again?
As far as you want, we can get your refund. It depends on if are you coaching with me?
Yeah.
Are you doing the monthly coaching or the quarterly coaching?
Yeah.
Are you doing each thing that I tell you? Because that's one of the easier situations is what you just said, to get that level of income down to a refund. Number one, first thing we're going to do is max out your solo 401k.
Okay.
Create a solo 401k, and let's say you're not married, so you're able to put in about $22,000 with that wage. So you put $22,000 into this. You put $22,000 into the solo 401k,
okay.
And let's say you're 20 years old, right? A lot of these guys are. You've got 45 years until you have to pull from your retirement. What would you think that 20,000 will be after?
I mean, you always hear like 1 or 2 million, right? Like you hear that, like, okay, maybe if I invest every single year for years into a 401k, then I would have like $1 million at retirement, right? I think that's like a common number that people come up with.
Yeah, so let's check and see what it would really be.
Yeah.
If you're hoping to make, let's say through Fortress Financial, our goal is to average 14% a year from now until retirement for each one of our clients. That's what they take home, not before our fees. So that's after our fees. So let's just say on the safe side, we end up hitting 13%.
Okay.
And so you put in $20,000, $22,000 that first year. Well, first off, we're going to go 72. I don't know if you can see this, but 72 divided by the rate, which is 13, rate of return.
Because the rate of return is the interest, the 13% interest.
You just put it in as 13, not 0.13.
Okay.
So that means your money's going to double every 5.538 years.
Okay.
So at that point, we put in, you've got 45 years till you have to pull from retirement.
So if I only put in 20,000 one time.
Yeah.
Okay, so one time in 5.5 years it doubles, gets to 40,000.
Yeah.
Okay.
So your money's going to double a total of 8.1 times.
By the time I'm retirement age.
Yeah.
Okay.
So that doesn't mean that you go 20,000 times 8, is 160,000.
Yeah.
You go, remember 8.125.
8.125. Got
So
it.
you go 20,000 times 2 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 times 1.125.
1.25. It was 8.125.
Yeah.
So
1.125.
okay.
So then we get $5,760,000.
So if I put in $20,000 one time, and we can have a full podcast on this. So I put in 20,000 one time when I'm 20 something, 20 years old. 20. If that doubles 8.5 times or so.
If you make 13%,
if I make 13%
from
year over year
until there,
which possible?
Very, very possible.
Okay, so it will double 8.125 times every 5.5 years, basically.
Yeah.
And I'll end up with $5,760,000.
$5.76 million. That's from doing it one time. So guys, listen to me when I say that coaching with me can change your life. Because guess what? You also just lowered your taxes by what? Let's see, maybe 22%, 25% on 20 grand. So
is that $82,000?
$4,000 that you now lowered your taxes by $4,000.
So I double dipped. I'm taking money, putting it into an asset, and I'm saving on taxes.
So what did you do? You compounded your net worth instantly. That's what compounding interest is all about. Finding ways to compound that net worth from here until you retire. And then remember, we're gonna do this, the 401k stuff, and then the next step's gonna be maxing out an HSA, make sure your IRAs are maxed out,
Yeah.
doing 529 plans for your kids, and then we're gonna do rental properties, as many as the banks will let us. And then we're gonna start doing the cost seg through an
And this is all on
investment
that
group.
82,000 that was remaining. Obviously, I have my living expenses and other things that are going to
Yep.
happen. But anything that we can,
You
we're
wanna-
trying to
yeah.
find tax benefits.
For the people that coach with me, if you want to go on massive compounding net worth run, then put 50% of all the money you put aside, and you will blow away anybody else that's thinking that they're doing good with their 20% investing. I mean, you'll blow them away. That's 50% put aside for investing and taxes.
Yeah.
So, I mean, guys, if you make 100,000 plus, that's doable. Make it happen for a couple of years while it's hard. Pretend like you don't make the 50,000. It's gonna make an absolute
Out of sight, out of mind.
incredible.
You're just putting it
yeah.
like regularly into an account
Yeah.
that's just going to
The
keep growing.
difference it will make in your life is astronomical. You go from being somebody that would have became a millionaire to somebody that becomes a billionaire because you're making those types of moves.
Yeah, because that 20,000. I mean, if I put in 20,000 a year.
But you can add more. The next year you could do 30. The next
Okay.
year do 40.
So if
then-
I'm really doing
yeah.
well in this business, then I should be putting in
Max-
money into this
max,
solo
yeah.
401k. And
The
that's one of our
IRAs, yeah.
big strategies.
Mhm.
But let's say the following year, now I still have, I mean, we've talked about a couple strategies, but like what else can I do? Like, and we'll talk about
The
all of
co-
those, right?
So, yeah, you're going to max out the HSA.
Okay.
If you've got kids, you're going to do 529 plans. And I think we're going to go into these more
Yeah.
in the next podcast and whatnot.
But like there's
But there's
car
that list.
deductions, there's
Yeah.
renting out my house, there's family management companies,
Yeah.
and it just goes on
So,
and on.
Yeah, let's say you do the 20K into the 401K,
Okay.
right?
So now I'm at 62K.
Now you're at 62. You're still paying much more than you want 'cause you're at 10,000 or so.
Okay.
And you're single. You don't want to pay that. So I tell you, are you going to recruit guys or try and grow your company this year
Mhm.
by being, flashy or by advertising it all?
Yeah.
Yeah, right.
I do some online marketing or something,
Cool.
Facebook, Instagram, and
Sweet.
try to pick up guys that way.
Well,
right?
check this out. Do you want a new truck or SUV?
Totally.
Okay, so on December 31st, you could go to go get a brand new Hummer that costs not a Hummer, they're too expensive right now, but maybe you go and get a $50,000
F-150.
Any truck,
yeah.
any
The
SUV
Ford
that-
Raptor. Let's
yeah,
Ford
anything that
Raptor.
weighs over 6,000
Okay.
pounds,
Yeah.
or a truck with a 6-foot bed. If you buy that on December 21st or 31st, you put no money down. All of a sudden, you're no longer paying that $10,000 in taxes. You're getting a $1,000 refund because you're also in school.
So I had 62 remaining. I bought a $50,000 plus car. I've got the standard deduction, which is the 12,000 because I'm single, right, in this
Yeah.
scenario. And
you're in school.
I'm in school. So now on 100,000,
You
I
could-
paid like almost $3,000 in self-employment tax. And then on the state and federal level, I'm actually getting a tax refund for $1,000 in this
Exactly.
scenario.
Yeah, exactly.
So, and I've put money in a 401k. I have a new ride, and I am in school
Yep.
still. So,
You're really
but I
maximizing
haven't. But the
your net worth.
remaining, I didn't spend that money. That I have a loan now for that amount for the 50 or 60,000.
Yeah, just
for that
think.
truck.
You save $10,000 on this scenario works with a $40,000 truck.
Yeah.
So if you just spent 40, you would
Oh,
still
40,
get that
okay.
$1,000
Yeah.
refund. So now you've got payments on that truck. You're going to hit 10,000 in payments at year 1.7.
Okay.
So you have 1.7 years to make up for that.
To use that 50,000 to earn more than
Yep.
$10,000
Yep,
what it would have
exactly.
cost.
Keep that 10K now and invest that, and it's going to blow away the difference on the 3.75 or 4.5 you're paying on your car.
Mm-hmm.
I mean, with tax advantages in there, you might be making a 30% tax or a 30% instant rate of return plus a 13% rate of return every year.
Yeah.
Like compared to the 3.75% rate on your truck.
Like an interest rate on the truck that
Yeah,
I'm paying.
your wife's going to tell you, pay it all off in a lot of situations so that we can save 3.75 instead of making an average of
It's 13, 17%, whatever that.
per year.
Yeah.
This is an amazing amount of different things that you guys can do, right? And that we're really excited about teaching you through the podcast, through the videos. But we're going to go into much more detail on those things later. This one here was more for the differences for what a person needs to do if they're on a 1099.
Oh my gosh, we could talk about this all day. Okay, well, what about this?
Yep.
Yeah, so anyway, this was number 2, and we're going to keep doing these every single week, so we'll have some guests and different people come in. But yes, LLC versus S corporation, or not doing it at all. Our strategy 100% is if you're earning $5,000 in profit, you absolutely need to set up an LLC, taxes, and S corporation. We can help you do that. Click links below. We've got all sorts of resources available. So with that, thanks, and compound your interests.
Do it.
Yeah. Okay, good.
Thank you.